Hi everyone, this is Fidel from Argentina. We're going to try and solve together exercise number 11.4, and we are given a balance sheet from a company, and we have as data, we have the paid-in capital, we have how much preferred stock and common stock they have, how much retained earnings, and how much treasury stock. And we are asked a few questions, so we're going to try and answer them together. From a review of the stockholders' equity section, answer the following questions. How many shares of common stock are outstanding? Now, we're not given here common stock. We're not given how many are outstanding, but we know that we're going to use the calculator. We know that 569,000 are issued, and we know that 7,000 have been recaptured by the company as treasury stock. They have been rebought. So the outstanding number is 562,000. Hopefully, we'll see when we submit it. Assuming there is a stated value, what is the stated value of the common stock? Okay, so common stock, as you can see here, says no par. That means there's no par value, but there could be a stated value. So that's what they're telling us, that there is one. So if we assume that there was a stated value, the only value that you can put in here in this account in common stock is the par value or the stated value. If they had been paid above that, a higher price, that difference would have to be in another account, which is called paid in capital in excess of common stock. So in excess of stated value. So we can assume that this value that they were paid, it equals the stated value of all those shares. So we're going to do the numbers. Clear. 2,845,000 divided by how many shares issued? 569,000. So we know that the stated value is $5 per share. Okay. What is the par value of the preferred stock? Where here we do the same reasoning. There is no paid-in capital in excess, so the par value of the preferred stock has to be this number divided by this number. How much they were paid divided by how many they issued. So we're going to do that. 707,200 divided by 6,800, and that equals 104. That is the value per share of the preferred stock. Now, this is an interesting question. If the annual dividend on preferred stock is 49,504, what is the dividend rate on the preferred stock? Okay, so we know that the dividend was 49,504, and that's what they paid for how many shares? We're talking about preferred stock. So how many shares we're talking about? How many were issued and outstanding? 6,800. So that's how much they paid per share of dividends. But we're not being asked how much, but we are being asked about the rate. So we have to find out how much, what percentage is this of the total price of the share. So we just do 7.28 divided by 104, which is the price of the share, and we know that is 7%. We have to express it as a percentage. Okay, hope that was clear. We find out how much they were paid, and then we find out which percentage does that money represent, which percentage of the price of the share. Okay, hope that was clear. Last question: if dividends of 75,700 were in arrears of unpreferred stock, what would be the balance reported for retained earnings? It would basically be the same balance. Whereas retained earnings, it would be the same balance, because when you have dividends in arrears, that's not a liability. So this number is, you get to this number after discounting the dividends from the net income. So whether they were current dividends or in arrear dividends is the same. The balance would be the same. It wouldn't change. Okay, that's what I think. So it's 1,184,000. 1,184,000. Okay, now the moment of truth. Let's see what happens. The internet is kind of slow today here, but okay, it worked. Your answer is correct. Okay, so we're done. So I hope this was useful to you, and see you.